we do that happen. I don't think we were that close. All right, what's up, winning wealthers? We're back. Brock, B-Rock, and Geoff. Today we have another guest interview on the podcast, which is going to be phenomenal. This person is someone that I've known for a long time. I respect the hell out of her. I think she's great, and it's a subject that can be very boring and dry, particularly to me, but we're talking tax strategies and accounting, and Anna does a phenomenal job at simplifying it and actually, bringing some energy to what can be a dry and complex subject. So she's a CPA. She's the owner of AKK Tax and Accounting. She helps real estate investors play the IRS game. And in 2022, her team has helped investors save at least $750 million in taxes by implementing tax strategy. She also owns a rental property portfolio herself. And we're really happy to have you here, Anna. You're the best. And really looking forward to diving into this. I've got some personal questions that I want to ask about tax strategy stuff, but we don't need to get into that right away. So why don't you, if you don't mind, I just gave a intro of your bio there, but if you don't mind elaborating on that and maybe giving us a 30-second elevator pitch for you and your business and what you do.
Yeah, absolutely. Thanks so much, guys, for having me on the podcast.
Absolutely.
I know you guys as friends, so it's always fun to hop on podcasts with people that I know and not just to be super boring because, like you said, taxes can be so boring and they don't have to be. I understand it's complicated, so let me just tell you a little bit about myself and then we'll get into that. So like Geoff said, my name is Anna. I own an accounting firm, virtual accounting firm that helps real estate investors play the IRS game. And the best way I can put that is I'm always figuring out what the wealthy are doing in terms of investing, but what are they doing to keep most of their money? So that's what I do. I love to learn the tax code so that I can just play the game like the wealthy do it and then teach all of you how to do it. It's possible. You don't need to know every law. You just need to have someone on your side that helps you play the IRS game. I also own rental properties in Wisconsin. Wisconsin is a great market.
Cash flow.
And then I currently live in Austin, Texas, and just recently purchased a property management company. So I'm in the business now of buying businesses, and still like living my best life, going out, dancing, like normal life. I'm not a boring accountant. I'm just a normal person.
Oh, I know that. We know that. So hold on. Let's, I don't know if this is going to throw off the flow, but talk to us about the property management company that you bought. Is that in Texas?
Where do I start with this? So it's crazy. Yes, we bought the property management company in Dallas. Sort of like, there's so many, the older generation are getting out of the workforce, right? So there's so many business up for grabs. So what we did is like, okay, I need to buy businesses. I want to buy multiple property management companies. And then at the end, my exit strategy is to bundle them and sell them to someone. And literally that will be my paycheck for the rest of my life, right?
Yeah, the roll up.
It has been, though, a struggle because it was a mom and pop shop. Didn't have any financials. They were like, yeah, these are our numbers. And then you dive in and you're like, wait, the employees are not doing what they're supposed to. So it's been a struggle, but I think that when you look at the end game, you have to work really hard at the beginning and water that little seed. So every time you buy a business or you buy a rental, it's like a seed that you're planting for your future. But watering it takes a long time for it to grow. I'm in the literally watering stage of this business, but you got to keep your eye on the game. If it was easy, everybody would be doing it.
Amen. So, and I've looked at buying a lot of businesses over the past few years, and I've always found that I kind of gravitate back towards real estate because I find that there's so many like kind of skeletons in the closet of businesses that in due diligence you find out and you're like, oh shit, and then there's just so it's similar. Did you buy it in cash or did you leverage it?
No, we did seller finance, which is obviously the best. So my partner is the one, he has properties in Dallas. So he did all the, all of finding and the networking. And I'm a numbers person, so that's what we did. But we did seller finance, which I absolutely love.
Huge.
Mhm.
And it was just someone that's like they're ready to be done with managing properties. They just want to move on.
Yeah, I don't know what this person was thinking. Yeah, I don't really, it's been a shit show. Like I'm telling you, I'll tell you a story really quick. There was,
Please do.
when we bought it, we had all these great numbers, and you always take those numbers with a grain of salt because they will lie to you, right? So we put, I think, $50,000 down, and then we started getting into the nitty gritty, and we're like, no. So we made adjustments to the purchase price. Fast forward like 3 weeks after we bought it, this was in June, emails us, tells us that he was abducted by, I'm not making this up. He calls us and he's like, Chase Bank just came to my house. They abducted me. They took me to Chase Bank. They took my computer and they made me withdraw like $150,000 out of the bank account. And I'm like, when my partner called me and told me this, I was like, you're kidding. Like abducted by aliens? Like who did he get abducted
The
by?
Chase
So I
Bank
think there's like
aliens.
other issues going on there.
Yeah.
So we pretty much ended up getting it for a really good steal because he got abducted by I don't know who, and we're like, well, we're not paying you for that money. That was your payout. Gotta go
Yeah.
buy. So it's a
Was
wild story.
was that money supposed to, because you can do, asset sale or stock sale, was that money supposed to come along with the business, like as an operating account?
Half of it was, yes.
Okay. And then he got abducted. And then did you guys value the business on like seller discretionary earnings or EBITDA? Like how'd you come to
I'm pretty sure we did it, and again, don't quote me on this because it was a while ago. Pretty sure we did it on the revenue from just like the revenue from property management and the
got
number
it.
of doors, which is 150 doors.
Got it. Which is also awesome too. I mean, just by like Adam owning the property management company as well, like it just puts you in the game. You can buy these properties from the investors that you're managing them for if you want, right? Like there's so many things that you can do, you know, uh, on the side of the property management business. It's a great business to be in. But is it only multifamily and single family that you guys manage, or do you do commercial?
Yeah, that's what we have now. And like I said, it's both. We've managed our own properties, so this is like new to us. He's also an investor. So it's all single family and multifamily. I think the biggest we have is like an 8 unit. Once we get this down pat, we'll continue to buy. But I will say, if anyone's buying a business or anything, and every time you buy something, it's always like perfect. But then you dig in and you're like, what the hell is this?
Yeah, yeah.
Yeah. So there's
I
that.
totally feel you there.
All right, well let's go into the premise here. So I'd say a lot of our listeners are people that are in their journey of building wealth, right? So they're whatever avenue they're deciding, whether it's entrepreneurship, W-2, right? They're in their path of building wealth. So I think we could start with talking about how important is it for someone as they're going through this journey to have tax planning at the forefront of their mind, right? As they're building their business or setting up LLCs, right? Different strategies that could be set up early on. How important is it for people to start learning this game so they can capture the benefits over their lifetime?
That's a great question, Brock, because I think when we're going through the game of like education, when you're coming out of college, and you want to start a business, you're so used to just using whether it's TurboTax or H&R Block, or the biggest one that I hear all the time. It's my dad's like CPA, he's a little bit older, doesn't know what they're doing. And when people don't realize that there's a difference between tax preparer and a tax consultant. So a tax preparer is an H&R Block. It's the people that you bring your documents to and they prepare your return, right? They're not giving you any advice on how to play the game. A tax consultant is going to look at your overall financial status and your business and what are your goals and determine what can we do to play the game. And I always tell people that the wealthy make the rules for themselves. Unfortunately, they don't make it as much as they want to tell you that they do, they don't. They do it for themselves because they're wealthy, they're business owners, they're real estate investors. So what are they going to do to play the game? But they're not going to teach us how to do it because then everybody would do it, right? So it's like the rules are there. You just need to find someone on your side. So for business owners who are just starting, it is a big investment when you go from a TurboTax that charges you $150 to having a tax consultant that I can tell you is 10x that amount. So you have to, as a business owner, you have to look at if you paid Bob down the road $300 to do your taxes, but you overpaid in taxes by $60,000, you really ended up paying $60,300, right? So instead of investing with someone who already had the knowledge. So as a beginning business owner, wealth builder, you have to change your mindset that a CPA is not an expense, but it's actually an investment that's going to help you play the game.
It's a paradigm shift.
Well, that's actually a really good question. Where Geoff and I were talking about this the other day. We probably need to talk offline about this more too. So there's a tax preparer, right? So like I use myself as an example. I have an accountant that does my taxes at the end of the year. She's great, right? I also have a financial advisor. We both use the same one, right? So he's been helping us with different things, but also using a tax consultant, right? Your business. That's something that would get in there. You'd use that as well as a tool, right? It's kind of three different roles almost, right? Or strategies you implement, because the tax preparer is going to put everything together at the end of the year, right? But not necessarily talking to you quarterly, coming up with plans of things you should be doing. Because by the end, when the year is over, right, a lot of those opportunities are probably gone. So is that a good sum up of kind of what the differences are?
Yeah. And I think the biggest thing I always say, like, the biggest thing what I hear, because it's true, when new leads come and talk to us, they'll always complain that their tax preparer they weren't there giving me all this advice. And the first thing I ask them is like, how much are they charging you? Right. Because I'm like, are they charging you? Because I think money, it's the biggest elephant in the room, right? So it's like, I'm straight from like, this is how much it's going to cost you. Do you want it? Yes or no? Because you need to know that. So when a client say, oh, well, Bob didn't tell me about the mileage or the cost segregation, it's like, all right, well, are you only seeing Bob on February 15th? Okay, well, that's the problem, because Bob's a tax preparer. He's not giving you advice prior. You should be talking to your CPA all year round, because things can change. You can sell a property, buy a property right now. Don't sell anything, because if you sell something, it's November 14th. If you sell something now, you will have April 15th. That's when those taxes are due if you generate a gain. So there's so much tax planning. So there is a difference between getting your taxes prepared. There's very little things that you can do in April 15th for the prior year, versus if you're talking to your CPA all year round. Hey guys, are you selling, your warehouse? Are you 1031ing it? Are you buying a car? Like, all those fun strategies that we talk about need to be done prior to 1231.
Just did all the above. So how many in your business then? How often do you meet with your clients throughout the year? Is it like a set? Hey, we're going to talk quarterly and run through like sort of a quarterly business review, or how is that structured?
Yeah, so we have different plans, because I think we're a very boutique CPA firm, because everybody is at a different stage in their wealth building, right? So we have clients who are just starting off, and we only talk to them once a year. So our minimum is once a year, no matter what. Or we have quarterly. So depending on the size of your business, the size of your portfolio, the hand-holding that you need. We have clients who have 2 properties and say, we want to talk to you every quarter, or your staff. So it really depends on what your needs are, and if it's a good fit for us. So minimum once a year.
Got it.
What is your this side topic, but like, what does your team look like? Like, so you have some employees. Like, what does your team look like right now?
Yeah, so I love my team. You guys know how hard it is to find like a good team, right? I always say, like, and I think every business owner says this, like, I could not function if it wasn't for my team. So we have 4 people, 2 employees, and then contractors. Tax preparers, it's unfortunately like a revolving door. So that's just life.
Got it. And you guys are all remote, like it's all virtual, right? Because you're taking clients all over
exactly.
the place.
I built my firm specifically so that we've been virtual since I opened my firm, because I don't want to be stuck living anywhere, and I want my employees to do whatever they want, whenever they want. If they want to work at 3 a.m, work at 3 a.m. As long as the work is getting done. I believe there's so much more to life than working. So they also invest in real estate. Like, that's the thing that I teach them. One of my staff is on their second purchase in Wisconsin. So I'm like so happy for them, even though I'm like, well, don't leave me yet. Like, you still need to work for me.
So let's go into, for the listeners, like, if you're someone that is, let's talk through the tax benefits of investing in real estate.
Absolutely. So you guys need to understand, the listeners who are, just in their beginning stages. when you are working for Chase, I always give the example of Chase. Whenever you work for Chase and you have a W-2 job, these strategies are very, very minimal. You can invest into your 401k and that's about it, but it does not generate any losses. So what a lot of people, if you look into people who are wealthy invest in real estate. And the reason for that is because they're allowed to take depreciation losses. So depreciation is a phantom expense that essentially the IRS gives you. Hey, if you buy a rental property, a commercial unit, a short-term rental, we are going to give you this write-off because as time goes, the building depreciates. That will probably allow you to create book losses. So if you have a rental property that makes $10,000 after all your expenses, they're going to give you a depreciation amount, and that's going to create a book loss, which will allow you a lot of times to be able to offset that income against your W-2. So for example, if you make $80,000 at Chase and you buy your first rental property and you create a book loss of $10,000 with depreciation, you will be able to net the $80,000 minus the $10,000. However, not everyone can do this. In order to be able to use, if you're still working at Chase, if you guys continue to say it's like having a W-2 job from a tax perspective is the worst thing you can do because you get no benefits. But if you are still there, you're still working your 9 to 5 at Chase, and you make over $150,000, you will not be able to take the write-offs against your W-2. That's a huge misconception because you have to qualify for real estate professional status. The reason this came about was because like back in like the 1980s, high net income earners such as doctors, anesthesiologists who were making like $500,000 were like, Jesus, I'm paying so much money. How can I deduct this? They ended up going out and buying a lot of rental properties and offsetting it against their W-2 from the hospital. And the IRS said, no. You're only going to be able to do this now if you qualify for real estate professional status.
Got it.
How do you define real estate professional status?
Yes, I'm going to break it down as easy as I can. So if you are working a W-2 job at Chase and you have rental properties, it doesn't matter if they're commercial, if there's a 1 unit, a duplex, a fourplex, it doesn't matter. If you're working a full-time job at Chase and you have a rental property and it generates a loss, the only way that you are going to be able to use that against your W-2 is by meeting these 2 tests. Test number 1 is you have to work more than 1/2 of your time in a real estate trader business. In other words, if you work 2,000 hours at Chase, you have to prove that you work 2,001 hours on your rental properties. That's impossible because you'll never sleep and it's just not going to happen. So if you have a full-time job and you have rental properties or you invest in syndications, you're not going to be able to see those write-offs against your W-2. However, let's say that you're a realtor and you also have properties. You've already met test number 1. You've already worked more than 1/2 of your time in a real estate trader business, which is being a realtor. The second test, and you have to pass both, is that you have to materially participate in your rentals. In other words, you have to pretty much be the landlord of your company, of your rentals, excuse me. You can have property management companies, but it does make it a little bit harder to qualify. So be careful when you buy rentals from a tax standpoint. I always tell people do not make investment decisions based on taxes. That is just like the cherry on top. It should not be your number 1 deciding factor.
What's your number 1 deciding factor when you buy a rental property?
So mine is how much passive income do I want and how do I get there? I don't get the tax benefits, unfortunately. I have my business where I literally write as much as I can off. But from a passive standpoint, because I'm not real estate professional, is how much money do I need passively and what's going to get me there? And that's how I determine how many rentals I need, how much cash flow I need.
Okay, so let's talk about depreciation. So I think it's a word that is used a lot, right? And it's a big word and can be confusing a lot of times. So can you define in its simplest form, what is depreciation?
Yes. So depreciation is not a real cash expense. So the way that depreciation is calculated when you own real estate is, let's say you purchase a building for $100,000 and you took away already the land. Say it was 120, land was 20,000. The basis, in an easy calculation, for your depreciation calculation will be $100,000. Depending on the type of asset, whether it's commercial or a single family, it will have a different year life. But let's just stick with a single family property. If you buy a single family home, purchase it for $100K, you're going to get 27 and a half years to depreciate it. So you literally take 100,000 divided by 27 and a half years, and that's a free expense on your tax return. However, that's a long time for you to take that depreciation. So there's this thing called cost segregation with bonus depreciation, which essentially, instead of taking that $100,000 and dividing it over 27 and a half years, a company will come in and they'll take a look at your entire building and break it out by different asset classes. They'll do their thing. You don't have to worry about that, but you could potentially get a way bigger deduction the first year to create those losses we talked about in order to offset them against other income. The problem with that is that, one, I see a lot of tax preparers who actually don't even depreciate these properties for their clients, and a lot of people who don't know what cost segregation is, which is a huge freebie that you get. So you just have to know someone who's going to help you do that. Hopefully that explains it very easily.
Yeah,
100%.
It is. You did simplify it, but it is a topic that can be a little bit complex and confusing. Yeah. Hey, how about, side note too, how about someone that just bought what's the car write-off? If you have a heavy car, I just bought one yesterday, so.
Ooh, what'd you buy? Tell me, I love cars.
A Range Rover.
Oh, wow. Who wants to love having that in the shop? But if you want to be like other people like have Range Rovers.
I am going to have some maintenance challenges, damn it. But anyway, so I'm really pumped about it. I like it a lot. How do I, what's the, I know this, we're not talking about real estate right now, but like, what's the, it's like over 6,000 pounds or something.
So if you have a legitimate side business, which real estate is a business, you have the ability to write off your cars. Okay. There's two ways to do it. And the best way that we talk about all the time is when you see like the G-Wagons, the Teslas, the Range Rovers, the Porsches. As long as it's over 6,000 pounds, and it's not 6,000 pounds, you can Google you can Google the oh my gosh, I can't say that word. The pounds of if your car is actually, if it weighs that pounds.
Yeah.
When you do that, if it's over 6,000 pounds and you use it over 50% for business, you're able to take an 80% deduction this year. So that's really nice. If you buy a $100,000 car, you'll be able to write off an $80,000 write-off this year. You don't have to buy cash. You don't have to buy a brand new. It has to just be new to you. So the problem here is that you should have bought that last year. Last year was 100%.
Shit.
This year you'll still get 80, but then next year it's 60, and then it continues to go down 20% every single year. I always say this because it's like my thing to say, but unless like Congress does something about it, we're stuck with nothing. But we don't have to worry about that yet.
Okay.
What if your car is less than 6,000 pounds? You get nothing. Or small.
If your car is less than 6,000 pounds, you still get a deduction, but the maximum is, I think this year is 22,000. So if your car is 100K and it's not over 6,000 pounds, your maximum will be 22,000 this year.
Like leasing versus buying, right? So if you're leasing, you don't get those benefits though.
That is correct. You cannot lease a car. A leased car vehicle is not going to qualify for depreciation. It just has to be one that you actually buy.
Got it. Okay.
Sucks to suck.
So you leased it.
I leased, yeah.
Oh,
well, I bought it last year.
Next time for a car advice.
Yeah, I should have.
I don't hate the idea of leasing. I bought this one yesterday, but I like the idea of leasing because I don't want depreciating assets on my balance sheet. Not talking about depreciation with tax purposes, but just the fact that cars go down in value, right? Versus, properties tend to go up in value and you can add value to them. So that's where, but I just said, fuck it.
I agree 100%. I leased all my life. I get bored with cars. But last year it was either buying a car or paying the IRS. So I just I had to buy a car like you know.
Yeah.
So, yeah.
Mm-hmm.
That works.
Yeah.
Okay, so what about, let's talk record keeping. So someone that is, building a business, they want to start writing stuff off, right? They're going out for coffees and lunches and buying things that they deem as a write-off. What's the best way for someone to be tracking this, right? So at the end of the year, or whatever cadence they're on, they have records of not just a bin full of receipts. They have some sort of record keeping system that they can send that to their account to say, here, here's everything.
Yes, great question. So when you have a business, you need to be really cognizant of the fact that you can write off a lot of things, right? Your travel, your business meals. I mean, every meal you should be having with a potential investor, client should be a write-off, right? You see all this on social media. All these things are doable, but you do have to keep really good records. So what I suggest is one, and you don't have to have an LLC. I should say that again. You do not have to have an LLC to be able to write things off. That's like a big misconception. You should have one, but LLCs are for asset protection only. But if you are starting your business, I would suggest having its own credit card and its own bank account, and having a record keeping software such as QuickBooks, so that every time you go out and you buy something or you spend money, it tracks it properly for you. You do need to keep the receipts. You don't need to give them to your CPA. You just need to keep them in case there is an audit. We're not auditors. We prepare your taxes, but we're not auditing if you went out to dinner with Geoff on a Friday night and spent $600. If something is like fishy, we'll ask about it. We've been there. Clients try to write off their strip club. I have a client. I'm like, they literally tell me it's a team meeting. And I'm like, okay.
What is it? T&E?
T&E.
T&E.
T&E. T&A.
So we're not auditors. If that's what you have, just keep your receipt. And I don't know how you would prove that. But anyways, just make sure that it's a legitimate. The way that people always ask, well, what can I write off? And unfortunately, there isn't a list that is given. It's just, what is an ordinary and necessary expense? It just varies by person, right? I have clients who have written off their Ferraris, but they're also YouTube creators. So their Ferraris is for content, media. It just depends on the person and the business that they're running. But it has to be legitimate. Don't try. There's 2 people I don't mess around with, or 3. 1, immigration, 2, the IRS, and like my mother. Besides that, don't try. They will come for you and they will find you.
Yeah. So that scares me about the receipts thing, because so what I do, this is kind of like a daily ritual or whatever, or routine. I have mint.com, right? So I have all my bank accounts, or most of my bank accounts and all my stuff on mint.com. So every day in the morning, I get up 5 a.m. or so, and I look over like all my cash accounts, and then you can see trends over time and stuff like that too. But then what I do is I reconcile, like the day before, was this, you can check, like, was it tax related, right? And then I put some notes in there about it, but I could be better about keeping receipts. So should you just, maybe a good practice is just taking a picture of a receipt, right? Like if you just have the picture of it, because I don't want to have shit.
It's a lot of paper.
Yeah. The way I do it myself is every time there's a receipt that is an actual paper receipt, I take a picture of the receipt, and I've created a Gmail account specifically called Receipts AKK, print it, and I email it to my Gmail account. You should be attaching it to the transaction. I don't have time for that. In case I get audited, I have all my emails in that specific Gmail account.
That's a good idea.
That is a good plan, and I am going to have to start adopting that.
Same. Yeah, I never knew that.
What about anyways, yeah, no. I think that's a solid strategy there. This is why we brought you on, not only because you're fun and awesome and great, but that's if I had the sound effect again, we would be dropping bombs right there. Yeah.
How far in advance should someone start thinking about tax planning, right? So heading into a year, is it something that they should have a cadence of, what's the timeline people should be thinking about this?
I'm so glad you brought this question. I didn't even pay you to say this. You actually brought it on your own, which I love, because right now it's November 14th. So for all the people who are listening and are like, I need to find a good CPA, the year's almost over. It's going to be really hard, because most CPAs already have their bandwidth with their current clients. And this is the time to tax plan. A lot of people think, okay, CPAs are busy from January to April because it's tax season. And Actually, this is our busiest time. We're working so much because every client is always like, all right, this is how much money I made. What do I need to do, Anna? So this is we're literally not busy during the summer, right? So the best time to find a CPA is in the summer. It's because you need to find them when they're like hanging out by the pool, figuring out what they're going to do with their lives. That's the best time. Finding a CPA fourth quarter and going forward is going to be really, really hard. Because so that's number one. Number two, from a tax planning standpoint, it should be done all year. Because what happens, Brock, if, I don't know, an offer comes up for your buildings January 15th, $10 million, and you're like, oh shit, yeah, let's do it. All right, well, we need to plan. What are we doing for the rest of that quarter? Usually the fourth quarter is obviously the best, but I do have clients who try to come and like do strategies on like December 20th. I'm like, you have 10 days to do all these things we've talked about. Like, I'm really honest. I'm like, where have you been all year? What happened?
Yeah. Are you still taking on clients in your business, or are you at bandwidth? Like, constraints?
We have a very limited amount of spots left. I think 20 were the last time I checked. And only because we want to be able to provide value to our clients. We're not a Walmart. We don't just, crank out tax returns. We really try to give a very personal touch to every single client.
What are some things people should be, because if someone's listening to this saying, I need to do this, I need to go out and find someone, what sort of questions or things they should be looking out for when they're going out and looking for a tax advisor?
Yes, that's a great question. Number one, usually finding a good CPA in your realm, obviously we're talking real estate right now, is word of mouth is like number one, right? Because if someone's used them before, they're probably good. Now, let me just say something. Everyone makes mistakes, so you should not leave your CPA because they made a mistake. We're all going to make mistakes, right? Mistakes happen. Number two, if you are in real estate, one thing you should always ask them is, how many clients in your portfolio have real estate? Because if it's just two, they're not going to be really up to date on anything, bonus depreciation, the de minimis rule or whatever, or all those things that are in real estate, right? So that 1031, are you familiar with 1031 exchanges? Mm-hmm. Do you have any connections or network of cost segregations? Like, we all work together. So if you need a referral to a real estate attorney, I should be able to give that to you. But if I have a restaurant who's coming to me asking me about tips or anything like that, I'd be like, I have no idea how to do it. So questions about real estate, anything related to real estate, it's very specific. The way that I tell people is, when you go to the doctor because there's something wrong with you, you go with a generalist. You're like, hey, my eye hurts, right? But when it's more specific about what's wrong with your eye, they're going to send you with a specialist. And that's how you need to look at when you find a tax preparer or a tax consultant. But remember, the general doctor is going to charge you $1, but the specialist is going to be a lot more expensive.
The current political regime, you could say, there's a lot of, from what I understand, there's a lot of policies up in the air right now, potential changes. What are some, and that might be a whole separate episode, right? But like, what are some that are at the forefront that you've seen that are potentially, whether it's been passed already and it's going to be implemented next year, or if they're going through approvals or whatever right now? Like, what are some of those things?
Politics is like my number one thing to talk about before taxes.
Here we go. I love it.
So there's the reason obviously is because when you become a business owner, you need to determine like, who are you voting for from business standpoint, because it does change a lot of things. So number one that I would tell people is the bonus depreciation. That's a huge component for real estate investors. It's going to give us so this year is, like I said, 80%, next year is 60, and so on and so forth. If they never bring that back, I'm not so inclined on 12/30 to go drop $100K on a car, which is not going to help the economy, right? I'm not so inclined to go buy rental properties, maybe, because it's not giving me that write-off. So that could be a huge thing. If they don't put it back into place, I would say minimum, give us 50%, like anything. 80%, perfect. 100%, I don't know, if Trump comes back, maybe he'll be nice to us.
We got to get back to 100%.
Huh?
We got to get back to 100%.
We gotta get back to 20. Yeah, I don't know how much I could talk about politics.
You could say whatever you want on this show.
Well,
it's all
good. 2024, when he comes back into office, yes, he will give us hopefully 100%. But so that would be the best thing. Another thing you guys need to think about is a lot of business owners who have a business, well, obviously, a lot of business owners, when they look at their tax return, there is this thing called Section 199A. And it's a freebie that Trump gave to all of us in order to just take that freebie percentage. I'm not even going to go into the calculation, but if you look at your tax return, Section 199A, it's there. It gives you a free deduction against your taxable income. I've seen clients who have it at 30,000, 40,000. It's just that here's 40K of a write-off. That goes away in 2025. If they don't bring it back and you have that, that's an additional X amount of money that's getting added back to your taxable income. So be careful with that. Another thing they were talking about was the step up in basis. So if you have parents who are going to give you properties, let's say your parents pass away, unfortunately, they bought their rental portfolio, and when they bought it, it was worth $1 million, because I was like back in the day, right? But now they passed away and they gave it to you, inherited to you, it's worth $10 million. They were trying to take away the step up in basis, because essentially what happens, let's say they give me all their portfolio, now it's worth 10 million. And I'm like, screw this, I don't want to be a landlord, let me just sell it all. You would get the step up in basis to fair market value of $10 million. What they were trying to do is say, we're not giving you that. That means that the $1 million basis that your parents had, that would be given to you. So when you try to sell it for 10 million, you'd pay capital gains of $9 million on that $9 million. Oh. So that's another thing they were trying to get away with. Or they're, it's always up in the air. And the last one, this is a very advanced strategy. If you guys don't know what self-directing your IRA means, they were trying to put a cap on how much money your self-directed IRA, which was, I think, either 10 or 20 million. And that might sound a lot to you, but if you're really good at self-directing your IRA, that 20 million can come really, really fast. So just always see what they're trying to pass.
I hear you. I heard that. Well, I think they've often tried to go to kill the 1031 exchanges too, but that one, I don't think that'll ever get touched. And like you said, even on both sides of the aisle, those politicians all own real estate. They all have properties, and so they're not going to cut their hand off, and screw themselves either, right? So hopefully, right? Hopefully.
Yep.
Yeah. So those are the ones that they have tried. The 1031 they have tried. It never passed, and obviously next year is an election year, and if they were to pass anything, sometimes what they'll do, and this is why you should love your CPA, because this is what happened in 2016. They literally passed it and they're like, okay, start it now. We're like, we're trying to learn it. While all our clients are calling us wait, what do you mean we could do this? I'm like, all right, chill out. We need to learn ourselves. So sometimes they do it retroactively, or sometimes they'll say starting next year. One of the biggest things they did just pass that everyone should know about is this LLC reporting. So anyone who has an LLC, there is a very, very tight reporting that needs to be done starting January 1st of 2024. It's extremely insane. The penalties of $500 a day if you don't report. It's crazy. And I can always give you guys an article and you guys can link it, because it's literally insane.
We'll do that. Throw that link in the notes.
For sure. Let's flip gears a little bit here to go on this last segment. So let's talk social media. So you post a lot of content. You built a big following on Instagram specifically.
How many followers?
Just hit 22.
Woo!
Let's see. What's is it? Anna K CPA? Is that
Anna K CPA? Go follow me now.
Give her a follow. She posts some great stuff. What strategies, I'm assuming, however many years it's been, you decide, hey, I'm going to start doing business on Instagram and build a following. What strategies have you implemented to build that following?
Well, I think they evolve as social media evolves, right? But I think what has really been working, I think we have grown to 22, literally. We went from 20,000 probably less than 2 weeks ago, and now we're at 22,000. What has really grown has worked for us is definitely appealing to the masses. I was very specific at the beginning of cost segregation, depreciation, and people were just okay, who cares? But it's if you educate people, and my goal has always been what's your goal for your Instagram? For me, it's to educate people that they can play the IRS game like the wealthy do it. I'm not telling them, hey, come to me, because of course our fees are a lot more expensive. They might not be within your budget. That's okay. But at least if I can educate you in the basic, you can go find someone who's going to be in your corner. So for us, it's appealing to the masses. And really also what has been working a lot is just showing yourself. I know Brock does this a lot where like he'll do like the meat toss or like really showing who you are as a normal individual. Like it's becoming more common that it's like, who are you? Like I'm outspoken. I love to go to church. I'm also like a Trump supporter, but I also love to drink. So it's like showing that you're a real person, but it doesn't appeal to everybody. Some people don't like it. So it's like, what is your goal as a for your social media?
I love that. And it's just being a real human. And then, the people that are like you that also like to drink and go to church and Trump, they are able to find you and assimilate with you and like, yeah, I'm down with that person, right?
Yeah.
Yeah, I agree. It definitely has helped us just be more of ourselves or myself.
What benefits have you seen from growing that? Obviously, it takes a lot of time and work, right, to build that following. It doesn't happen overnight. Like, what benefits have you seen directly from that?
I could never be an influencer. You guys don't understand you guys do understand. Like, I can't even imagine, like, it's so much work. I will be like at the gym and I think of an idea and I write on my notes. I'm like, oh, this would be a good video or like recording. So like being an influencer, I give people props. It's a lot of work. But I will 100% say that every year we have at least increased our revenue, which allows me to give to my employees more by 40, if not 50%. So it's worth
Wow.
all of the freaking effort.
And mostly from Instagram.
But I love educating.
Yeah. Wow. That's impressive.
Yeah. Do you do other platforms or whatever, like LinkedIn or Twitter, X?
TikTok is a little bit harder. I'm also like, I like to show my personal life, but not so much. So my marketing guy is always like, show more personal. And I'm like, no, I don't want to. So I think TikTok is becoming like more personal. And I find it hard to sometimes find the balance of giving personal and not all education. So TikTok is the other one.
Got it. So where do you have, like, we talk a lot about goal setting on this show. Do you have like certain goals for yourself? I know you said we were talking offline about moving around different places like Scottsdale and Mexico, but like, do you have certain business goals and personal goals or anything that you could share?
Yes, absolutely. So 2023, we've met our goals, which I'm like super happy about for the firm and for our employees. Obviously, we're always have really big goals for next year for the firm to continue to grow higher. And we have a certain sales number that we want to get to. But for me, passively, I am working on making minimum. Don't judge me on my number, but I want to make at least between $25,000 to $30,000 a month from passive income, like just rentals or the property management company. Once it's passive, it's not right now, because I also want to like get married, have kids. I don't want to be doing this for the rest of my life. So it's like, no, and I think everyone can relate to that. We want passive income. And I always tell clients, it's like, we're still young, right? We love to work, but eventually there's going to come a time and place where like, all right, like I'm good to just like, I don't know if I'll ever just sit back and not do anything, but it'd be nice to rely on that 30K or whatever my number changes every single, year from a passive. So that's my goal. Continue to buy more properties, which I think will be great timing.
I completely agree. And that's one of the things I love about the real estate business too, is like, you can be super, super, super active right now, but I'll never like retire. Right. I'm too wired to work. So, but like, if I look at, Geoff, when I'm 80 years old, I'm playing a lot of golf, but I can still be involved in the real estate business and still do deals. And it's something that you can do lifelong, sort of career, building out a portfolio. So I totally agree there.
Just like Grant Cardone says, like making money in your sleep, like making money in your sleep is the best thing. And like, whatever your hobbies are, you're able to have that freedom by getting money the first of the month is our favorite day. I don't even
Reds too, baby.
Yep.
The Oracle of Omaha, Warren Buffett, also said that too. He comes up all the time on this show.
You guys love to golf.
Mm-hmm.
Yeah.
What's your handicap at when you're 80 years old?
My handicap's going to be definitely single digits by the time I'm 80. Nah. Yeah, probably.
All right.
You hold me to it, man. I got, 46 years.
It's time.
That's a long ways, man.
Yeah.
I'm making progress. What's yours going to be?
You are getting better. I don't know. The same.
Just staying the same.
I think, wait,
We'll
Brock
see.
is like so much younger than me personally, right, Brock? Are you even 30,
I'm
Brock?
29. I turned 30 in May.
Oh my,
Man, the dirty 30. Wow.
good for you. Had I known what I know now when I was your age, woo,
No shit.
sound like an old lady.
You and me are right there. Did we graduate at the same time? 07?
07. Oh my gosh, I'm old. No, we're still so young. Look at us.
We are.
right.
We are.
Plenty of time.
So, do you have any, wrap it up here. Do you have any, like, either life hacks or business hacks for people to be, that want to build wealth and be successful, either from a tax perspective or just, something that you would share for advice for someone looking to get where you are?
Yeah. My biggest thing, I've always been like this. It's like I will always take the road that somebody else took and pay however much money I need to pay to get there. It's always work smarter, not harder. Of course, like you still have to work hard, right? But if you're trying to get to a place where, hey, like for me, it's like buying businesses, right? It's like, well, I've never done that. So I'm going to go around people and I'm going to invest in masterminds and be around people who've bought businesses so that I don't have to reinvent the wheel and learn every single thing about buying a business. So whatever your goal is, it's one, be in the same rooms. It sounds so repetitive, like be in the same rooms as other people, but like it's so true because it gets you in that mindset. Like be friends with people, surround yourself with people who have the same goals as you. I think eventually as we get older, we kind of start drifting away from our high school friends or anything that it's like, it was great, but we can't have the same conversations of like, hey, what are you doing next year? Like, what are your career goals? Like, are you buying another building? So definitely be around people who have the same goals, but read. I love reading. So it's like always reading and being like smarter and like learning new things is like my number one thing.
Try to learn something new
I love
that could be productive every single day. Just one new thing at least. What books are you reading right now? Do you have anything currently on the
What's
shelf?
it called? It's called, oh my gosh, 10x, not
10x
is better
good
than 2x.
Yeah. I
were
read that one
talking
too.
about
Yeah,
that,
that's a good one.
Yeah, I literally just got it and I'm going to start reading it.
There's a little workbook that goes along with it too. I didn't do the workbook, but I am thinking about doing that for 2024. Side note, we should actually do a book review on that. You should read that one too.
Yeah, I got it's on my list.
All right, Anna, you are the bomb. I really appreciate you coming on. I can't wait to hang out with you again sometime soon when you're back up this way, or if I'm down there, I'll hit you up. But anything else, Brock?
No, I think we went through a lot of awesome stuff. Appreciate having you on.
Thanks, guys, for having me. Hopefully it was good for your listeners. And if you guys have any questions, you know where to find me. And if you're ever in Austin, I'll be here.
Love it. At Anna K CPA.
Give it a follow.
Thank you.
Thanks so much.